Good afternoon, traders. It's Bill Baruch with Blue Line Futures, and I'm bringing you a post-Fed wrap-up. But before I get to it, if you're watching this on YouTube, please click the link below and subscribe. Like and subscribe. If you're watching from our website, there's also a link below to direct you to YouTube, and you can subscribe that way. We'd love you to follow us. We'd love for you to help us build our following. All right, let's get to it. What a day, what a week, what a year. I mean, before I dive into the Fed Chair Powell, we are seeing record highs today in the Dow. With the futures roll, we're seeing record highs in the NASDAQ. And the S&P with the futures roll is about 1% from its record high. So what a move. All right, we got from the Fed today, this is an official pivot. I think you have to call this a pivot. I mean, they are not talking about rate hikes anymore. Hikes are off the table. They are talking about rate cuts. And the dot plot forecasted 3 rate cuts next year. We're also seeing the odds, according to the CME's Fed Watch tool, show us 66% probability the Fed cuts in March. Now, I was thinking there could be some doubt here. It might be priced in a little too early. I think after today, it's not. After today, that being priced in is not too early. And then again, the reason why I never thought that it couldn't be was when the Fed typically pauses, you see a rate cut 7 months on average afterwards. And that kind of lines up fairly well. But this week as well, we've seen inflation come down. We've seen PPI come down and stay down. It's been coming down. It's been trending down. But today's data from PPI, yesterday's data from CPI confirms that we're continuing to see this trend lower. The Fed is using that data and really showing us today that they are, I wouldn't call it quite a victory lap, but they see the light at the end of the tunnel here. It is loud and clear that they see the light at the end of the tunnel, and the risk of doing too much is outweighing the risk of doing too little. And that was something going back a couple meetings ago that they really highlighted, I think, in September. That was really that it started to lay the groundwork for the pivot. Now, I mean, when it comes to inflation, I think they're feeling very confident in that. Fed Chair Powell even highlighted that the supply chains should continue to ease and continue to bring inflation down. I think overall, he highlighted that, I believe, twice or 3 times in the press conference. So I think they're very confident in the direction of inflation here. We should be seeing a 2-handle soon. Some of the data, other just activity data, growth and whatnot, we've seen kind of just trickled down a little bit. But Fed Chair Powell did talk about it. If we see growth start to reemerge and sort of even inflation start to reemerge, but if growth, he did highlight, it could be a reason to be looking at, again, hiking rates at some point. But where we're looking at it now, I mean, you got a 5.5% Fed policy rate, and you got the 10-year yield now at 4%. I mean, if you're looking for a recession, you're looking at yields coming down to 4% in the 10-year, but inflation is at 3% and the policy rate's at 5%. Having that sort of divergence right there, that lays the groundwork in a slowing growth environment to see a recession. And I don't think they want to see a recession. They see the light in the tunnel here to be able to get through this clearly. So what we saw today was sort of an everything rally, except for the dollar, of course. You got the record highs within reach or across the board in much of this. Big, huge day for the Russell 2000 out above 1900. You got gold and silver showing up. You got the 10-year down to 4%, as I highlighted. You have a terrific move in the 2-year. That's down to the lowest level since the summer on the yield side, but a potential really strong, beautiful chart breakout in the 2-year prices on the futures contracts. So you got a lot of tailwinds here for a risk on. Now, we've seen this before where you have a message delivered, a reaction in the Fed day, and then it sort of disappears. Now, I don't think that's going to be the case today. But as we move into close out the week, well, you want to make sure you're managing risk properly because you're looking at stuff in the S&P overall. If you're chasing this move, 47.07, that was the previous gap in the March 2024 contract going back from the summer highs. You got to stay out above 47.07. Ironically, it was the level and where this market lifted off at the meeting as well. You want to make sure some of these levels are held. If you look at the commodities, gold, it's back to the scene of the crime from last Friday's non-farm payroll report. Silver as well, same thing. Now you got crude oil trying to regain $70. Some bullish headline data today from the EIA, but overall it's trying to potentially see a move that can help build it too. Copper showing a good move. Now, new loans data out of China tonight, early this morning, was a little underwhelming. So it's good seeing these commodities show up. The U.S. dollar is weakening. keep an eye on the currencies and keep an eye on the treasuries. They will confirm if this is something that can stay in through closing out the week. And we want to see this move on a weekly closing basis. But it sure as heck is great to see here for now. And our team is always here to help. So don't hesitate to reach out, 312-278-0500. And remember, futures trading involves substantial risk of loss. It is not suitable for all investors.